Just a minute, I'm not able to upload the file. Is my screen now visible?
Yes, visible.
Okay.
It is visible.
Okay, thank you so much. So we are going to start today with MMPC004 and it
So,
is
teacher,
accounting.
instead of me, it's not visible the screen.
Pardon?
Screen share is not visible.
Mustafa, you need to check it from
Yeah,
your end because it is visible to others. So I think there
yes, it's
might
not
be some
visible.
connectivity problem.
I hope problems my connection.
You try to reconnect, okay,
Okay,
because
thank
it
you.
is
Okay,
visible to others, or else if you have the content saved in your device, you can open that also. You can just use this your device only for listening, okay? So what I was saying is that we are going to start with MMPC004 and it is accounting for managers. Now, when I talk about it is accounting for managers, you need to understand few basic things related to accounting. So this is the block 1 and in this block you have 5 units. Your unit represents your chapters. So when I talk about that, you have 5 units. The first one is related to introduction to accounting. Next, it is how we prepare the books of accounting. After the books, it is the next phase, which talks about financial statements, preparation of final accounts of companies, and then the last one in block 1 is cash flow statement. So likewise, we have, as you can see, we have
yes,
in
now it's
total
okay.
5 blocks. Okay, so ma'am has scheduled it, the classes, the scheduling of the classes is according to blocks. So I will try my level best to complete one block in that particular day. We will be allotted with one extra day, and that day will be for your doubts clearing. Am I clear? So the first requirement is that you should come prepared with the content, because this is only a counseling class, and counseling class means that I will give you the overview of the topic, and in case if you have any doubt you can ask me. I hope this is clear to everyone because you have attended other classes also in the past few days.
Yes,
Yes,
it's
ma'am.
clear,
Yes.
ma'am.
Okay, so counseling is very clear because I cannot make you understand each and everything. It will take time, and only one day is allotted for a particular block. So I will try my best to make you understand whatever I can. But again, you have to also put your hard efforts, because once the counseling sessions are over, you will be given with the assignments. So let me start with the first one. By the time you have to give your attendance in the chat box, everyone, those who are attending the class, has to write your names in the chat box. From here, from this page, we start with our subject. So it is introduction to accounting. And what is the objective of this? To make you understand the nature and role of accounting, meaning and objective of accounting, different branches of accounting, users of accounting information, and the basic accounting concept, principles, and conventions. So the structure is likewise. We are going to start with the definitions first, then we will come to the next part. So in total, if you say the first unit, we are going to study 1.9. Answer to check your progress, and summary is something else that you have to practice. But if we take out these two topics, we have divided the first block into 7 parts. So starting with the introduction part, what is accounting? Accounting is nothing but it is a business language. When we talk about business language, then what it means, the basic function of this language is to communicate. Like any other language, the basic function for accounting is also to communicate. Now, what is communicated? We communicate the transactions which occur in the business. Various business operations takes place, and how we communicate this business transactions operations in terms of numbers. So it is an art of recording. You can see here the definition is also given. It is an art of recording, classifying, and summarizing the transactions which are done in terms of money, at least in such a manner that the characters are well understood. So what is important here? Accounting, it is a language, which is which type of language? The language is in the form of some characters, and that characters is numbers, which can be, through this language we understand the nature of transaction, the type of transaction, and all the transactions which we are talking about, they should be dealing in money. They should have monetary value. Then only we can communicate such language. It is a process of recording, classifying, and summarizing. Recording means each and every transaction that takes place in the business has to be recorded in the books of accounts. We need to classify. Classifying is taking the transactions and then classifying them, distributing them as per the nature. Some transactions may be revenue in nature, some transactions may be for fixed assets, some transaction may be for expenses, some transaction may be for raising funds. So in order to understand the nature of the transactions, we classify them. And there are certain rules for which, on the basis of which we classify the transactions. And later on, all the transactions which are classified, they are summarized so that we can understand the position of a business, the position of our assets and liabilities, and most important, whether it is a profit or loss. So if we start with the next one, it says about the objectives and scope of accounting. What are the objectives and scope? Scope means the application part. If you know accounting, where it can be used, how it is helpful. So the objective is very clear from the first part, from the introduction part only. It is the systematic recording of all the financial transactions. we need these transactions, we put them in a chronological order. What is chronological order? Chronological order means date wise. We cannot put the transaction, suppose a transaction occurred in the month of March and a transaction occurred in the month of January. So chronological order states that the first transaction has to be entered for the month of January, then only we can move to the next transaction. It cannot be like this ki you first deal with the transaction for the month of March. So it has to be recorded in a chronological order, and this recording of journals is done in, all the transactions are recorded in a book which is called journal. It is the principal book of recording the entries, and from the journal, the transactions are posted to ledger. Ledger is a book where we maintain the accounts headwise. Like if you pay salary, all the amounts which are paid against salary for the whole year has to be recorded under one place. So this recording of individual heads is done in ledger, and from ledger it is passed to trial balance. Trial balance means if you have 100 rupees and if you have spent 70 rupees, 30 rupees you should have in your hand. So on one side, 100 equals to 70 plus 30. So trial balance is a statement where we have the recording of all the transactions, whether it is in the form of incoming or outgoing. We also do the accounting entries, as I said, to know the position of our business, the result of our business in the form of profit or loss. We also do this accounting transactions in order to find the position of the assets and liabilities. And to know the position of assets and liabilities, we prepare a statement, and the statement is known as balance sheet. This accounting information is helpful for various users. It provides information to the parties and stakeholders who are interested in investing in that company. It is also helpful for the managers and directors to make some good strategic decisions. It helps the management to interpret the numbers in the form of profit or loss through the reports that are generated from the transactions. So, what is the scope of accounting? Scope is application. So, the scope states that it is, first we start with processing the methods, and when we start with processing the methods, it can be manual or electronic. We all know when we start with data collection, then nowadays it is manual, otherwise, previously it was manual, and nowadays it is electronic. Then it is recording. All the transactions, they are recorded as per the accounting method. Accounting method is a set of rules on the basis of which transactions are classified. Then we go with the accounting theory. Then we come with the budgetary control, cash flow, all the fund flow analysis. Then the data is processed, and the outcome is your profit or loss. So if you start, this is all given, the scope. Now, few terminologies you must be very much familiar with. The terminologies mostly used are, first,
Ma'am,
yes, ma'am.
hello everyone. Sorry to interrupt you.
No issue, ma'am. Please proceed.
Ma'am, hope you made some of them a co-host.
No, I have not made, ma'am, but I am admitting them.
Okay. Otherwise, you can make one or two. I'm making them. Otherwise, in
Okay.
next class, you need to make them so that
Okay.
they can enter the learners.
Okay.
Okay.
I have asked them to write their names in the chat box.
Yes, ma'am. Simpo and Mustafa. Yes, I'm making Mustafa Barkhan Karte. I'm making your co-host. And Usman Ismail, I'm making a co-host. Ma'am, please carry on. Sorry for
No,
interruption.
no, it's okay, ma'am.
Sorry, teacher. Sorry.
You want to say something?
Please say something if you want to say something, Mustafa, or someone else. So many are joining now. At least I think they were not permitted to join, maybe or something, or not. Okay, ma'am, please carry on.
Okay, ma'am.
Sorry, doctor. Today connection is problem in my country. I hear you, but sometimes connection out of my device. But I'm person.
Is there any connection problem?
Yes, outside of me,
Okay.
not
Oh,
outside you.
I'm making two, three persons. I'll make Richard also a co-host. Okay.
Okay, now it's okay.
Thank you.
Okay, so now we were talking about the accounting transactions. And when we talk about accounting transactions, the first thing that we need to consider is it should be of economic in nature. All the events which are economic in nature, they are only considered in recording the transactions. So, what is economic event? Anything which has a monetary value. If the transaction cannot be in the form of monetary value, those transactions do not find any place in your accounting books. So when we purchase a machinery, we go for sale of machinery, we pay salary, we pay transportation charges. This all are included in your economic events. Coming to the second one, it is identification, measurement, recording, and communication.
You may keep
Identification,
your camera off, okay? Some of the learners' camera is on by mistake, I think.
that is the reason then they are not able to view the presentation. Okay. So identification, measurement, recording, and communication. Identification means that you need to identify the nature of the transaction. Measurement means already I told you it has to be measured in terms of money. Recorded, you have to put them in a specific book. Book may be journal, and from the journal, you have to classify the transaction and then you have to transfer it to the individual head, which is recorded in ledger. And the last one is communication. Communication means that you need to communicate whether the nature of transaction is recurring in nature, it has to be transferred to profit and loss account, or it reveals the position of your balance sheet. Organization, it refers to the size of business and the type of activities. The next important part is the organization, which is, can you see it? Yes. Now, next it is assets. The next content is assets. Assets are those resources which are owned by the organization. Asset means the property of the business. It can be plant and machinery, it can be furniture, it can be land and building, it can be computers, it can be vehicles, etc. Any form of fixed asset which can be seen, touched, they are tangible assets. And intangible, which cannot be seen or touched, but they occupy a place in your business. Understood?
Yes, so far good.
Sorry, Doc.
Yes, Khalid, you want to say something?
Yeah, I just want to know what you have been discussing. Are they the scope of accountants or what?
I am discussing the terminologies that we are going to use, because you all told that you are not familiar with accounting. So these are the
Yeah.
terms which you are going to come across in your all the classes.
Oh, it's okay. It's okay. Thank you.
Okay, these are
Thank
the
you.
basic terms which are used for accounting. Whole accounting revolves around these terms. Okay, so asset, it is the property of the business. It can be as land, it can be machinery, it can be furniture. Liabilities means that we owe to others. It can be a loan. When we take funds from others, we need to repay it. So liability is what we owe to others, which has to be paid. Next comes the owner's equity. Equity means it is shares, the shares that are owned by the shareholders. And when it comes to organization, in the organizations, the real owners of the business are the equity shareholders. So owner's equity comprises of assets equals to liabilities plus owner's equity. So we need to now come to the accounting cycle. What is accounting cycle? The first step in accounting cycle is we need to identify the financial transaction and events. Second, it is we need to measure the transaction in terms of monetary value. Once it is identified and measured, next step is it has to be recorded in the set of books, which is known as journal or subsidiary books. Once they are recorded, we need to transfer them to their individual heads in the ledger account. Then we need to summarize them. The summarization of the accounts from ledger books will be transferred to trading account, profit and loss account, and balance sheet. So we need to analyze and interpret the data once we transfer, because it is a mere number. We cannot understand the we cannot understand on the basis of number. An unknown person, a layman, cannot understand what the numbers reflect. So the numbers reflect whatever is the result. It has to be put it in the form of a report. So the entries of trading account, the entries of profit and loss account and balance sheet, they are transferred, and then the step is known as analyzing and interpreting the financial data. And this interpretation is done through the reports, and these reports are communicated to the management. So this whole process is known as accounting cycle. And this accounting cycle is divided into two. One is bookkeeping and second is accounting. Bookkeeping means the transactions where we classify. Bookkeeping is the process till recording and classifying them in the ledgers. After the classification, whatever is the process, it is your accounting. And accountancy is applying the knowledge of accounting in through use of certain principles and accounting techniques. So these are the three broad terms used: bookkeeping, accounting, and accountancy. I'm not coming to this, I'm coming to the next one. What is the system of accounting? There are two systems of recording transaction in the books of account. They are double entry system accounting and single entry system. Single entry system is a outdated one. In the company form of organization, we do not follow the single entry system. We refer only to the double entry system because it has a dual aspect principle. What are this dual aspect principle? It means that every transaction has two aspects. This is important for you. Just listen. Every transaction has two aspects. One aspect is debit and the other aspect is credit. So the system of accounting recognizes and records both aspects of transaction. When you make a transaction, when any transaction takes place, we have to take both the aspects into recording. What are these two aspects? It is debit and credit. It means that if you spend rupees 100 for salary, that means one aspect is your expenditure, which you are paying in the form of salary. The other aspect is you are paying it in the form of cash. So the two aspects are cash and salary. These two aspects need to be identified in each transaction. So, what is the takeaway from this double entry system? It means that when we take both the aspects into transaction, so minimum 2 accounts in a single transaction should be involved. Single account in a transaction is not your double entry system. Coming to single entry system, I told you single entry system doesn't take both the aspects into accounting. It only takes one aspect. So we follow the double entry system as it is a scientific system, and it records all the transactions completely. It also checks your arithmetical accuracy, because if 100 rupees goes out, under which head that 100 rupees has gone out, it tries to make the equal balance between the two. Now, application of accounting. It helps in the financial performance. It helps the management to take strict strategic decisions. It helps in planning. It helps in controlling. It provides financial information in the form of reports. It is also helpful for comparative study, and when we need to pay taxes, whether it is income tax, GST, it is on the basis of the accounting transactions only. So, coming to the next, I'm moving to the important part. This is all theory. You can study this because this we will be doing in the later one. So now we are starting with the accounting framework. The accounting framework talks about the relevance, objectivity, and feasibility. What is this accounting framework? Accounting framework means that why we are going to perform a particular transaction. Next, what is the objectivity of performing that transaction? And the last one is feasibility. Is it going to give you any profits or not? Is it necessary in the course of business? So when you start with accounting, you cannot simply say this is debit and this is credit. We need to find the accounting concepts are there, and these accounting concepts help you to understand what actually the accounting framework is. The first part of this is business entity concept. Business entity concept means that business is a separate unit from the owners. Again, I repeat, business is a separate unit from the owners. Business, the life of the business will continue irrespective of the life of the owner. The transactions which are related to business are only business transactions, and they are not to be included in the transaction of any individual or the owner. So there should be a proper distinction made and maintained so that the owner is different and the business is different. I hope the first concept is clear, that business entity, business is a separate person. Business is taken as a individual identity. It is not to be clubbed with the owners. Coming to the next, money measurement concept. Money measurement concept states that only those transactions which can be measured in money have to be taken into recording the transaction. So we need to find the monetary value of each transaction. And if the transaction cannot be transformed into monetary value, in that case, that transaction is omitted from accounting. Am I clear? Like they have
Yes, yes.
given you the examples, 5 buildings. 5 is a number, but the value of the building is not mentioned. If it is written that the business owns 5 buildings and the value of those buildings is not mentioned, whether you own 5 buildings or 10 buildings or 100 buildings, it is not going to make any difference unless and until the buildings are having its value. Am I clear? So we need to ascertain the value of each transaction. So money is the yardstick, is the measuring rod on the basis of which we try to identify the monetary value. Coming to the third point, third is continuity concept. Continuity concept is also known as going concern concept, and going concern concept is again correlated with your business entity concept. Continuity concept says that when business is different and the owners of the business are different, it has nothing to do with the owner's life. In such case, even if the owner is no more or the owner has changed, then too the enterprise will go on. It will continue functioning irrespective of the name or change in the owner. So, the assumption of this is that the business will liquidate by its own. It will not be ending with the life of the owner. Next one, the next concept is cost concept. So, everything that is recorded in the books, the first important aspect is it should have a monetary value. Now, the second aspect of this is that when it should have a monetary value, then what should be the value that has to be taken into account? Because once you take the value, then what happens? Suppose you say that I have purchased an asset. Take an example of a building. And we all know that there may be an appreciation in the price. It has been purchased for 10 lakhs and then after 5 years its value is 15 lakhs. So in your books, what you are going to depict? 10 lakhs, 15 lakhs or something else. So every time when the value of the building keeps on changing, it is very difficult to come to the conclusion that what value has to be actually taken in the books. So we have decided, the accounting people have decided the cost concept. The cost concept states that all the assets, all the resources which are purchased, they have to be taken on the basis of their historic cost. What is historic cost? The cost which is the initial cost, and this initial cost is taken into account. The book value which we take into consideration is the historic cost. Am I clear with cost concept?
Yeah, well, with you, Doc.
It is not going to make any difference if there is any change in the values. There may be a different market value, but the book value is always going to be the same which you have recorded as the initial price. Now the next concept is accrual concept. Accrual concept means that whenever the transaction takes place, whether it is in the form of cash or credit, it has to be recorded. The accounting book doesn't say that it has to record only the cash transaction or credit transaction. So, accrual concept, the entry has to be made before it is given to someone else. So, even if it is a credit transaction, it has to be recorded so that you come to know what is the credit balance at a particular point of time. The next concept that we talk about is of concept of conservatism. Conservatism means traditional belief. What is traditional belief? That if we have debtors, we have outstanding, and the debtors are of 1 lakh. After 3 months, we need to get the amount from the debtors. And after 3, so yes, there was some distraction. So when we talk about conservatism, it means that we are always prepared for the possible losses. We anticipate no profit for future, but we are prepared for the loss. In future, conservatism means it is a traditional belief. In future, we can have profits, but we don't worry about the profits. We always are concerned about the losses that can occur in the future. So, for this, we make certain provisions. I was giving the example that you have debtors from whom you are going to get back your money. And after you have a debtors of 1 lakh rupees, and after 3 months, when it is time for making the payment, you find that 10,000 rupees value debtors have been not in a position to pay you the amount. So what you are going to do in that case? They are missing. They are no more, or they have gone bankrupt. So you don't have any option for recovery of that amount. So when we have outstandings, at that point of time, we go for making provisions so that even if in case there is a loss, we are already prepared for that, and we have anticipated that loss well in future. Next comes materiality concept. Materiality concept means that we are going to take the transactions only which are material in nature. Material in nature means, suppose there is a fight between two persons in the factory, and due to that fight, their furnitures, a value of rupees 5,000 got damaged. So this transaction will be taken into account because there is a damage of rupees 5,000. It is a loss, the monetary loss of rupees 5,000. But if there is no loss and it is only a fight between two people, then in that case, the transaction will not be recorded, because from the point of view of accounting concept, it is immaterial. Why it is immaterial? Because it cannot be transformed into monetary value, and money measurement concept is again one of the important concepts which we have seen. So if it cannot be measured in terms of money, it means that it is not to be recorded in the books. Next is consistency concept. Consistency concept means that we should follow a similar path, a same pattern. If we say we are providing discount at 15%, every time you do not change the rate of percentage. So whatever entry you are making, whatever formula you are applying, whatever accounting principles you are following, that has to be unique, uniform, same. Consistency should be there. Every now and then you cannot change the type. Next comes periodicity concept. The business life is endless. It goes on and on. We all know that generations change, but the life of the business remains same. So in order to put them in a proper sequence, in a proper manner, we need to break the accounting records into periods. And the accounting people have decided to take one financial year for obtaining the necessary information. So period, it can be your calendar year, it can be your financial year. It can be from January to December, it can be from April to March. So all the transactions which are completed within a period of 12 months are under one accounting period. Next, it is accounting standards. What is accounting standards? The policy that we follow. Accounting standards means that we need to have certain methods for recording the transaction. So if you go with this accounting standards, they're generally accepted accounting principles all over the world, and the rule remains same. Now I'm coming to the next one, unit 2. What are the books which are prepared? So the books which are prepared are an overview of balance sheet. We need to classify the accounts and dual aspect, journal, ledger, and then summary. So the first book which it talks about is profit and loss account. Profit and loss is an account, it is a statement where we try to find the profit earned or the loss which is incurred during an accounting period. And again, I say accounting period I have mentioned, it is of 12 months. If you want to know the profit for a shorter period, say 3 months, 2 months, you can break down those 12 months also into a day, a 15 days, or a month's transaction. Next is balance sheet, where we try to find the financial position on a particular date. What is financial position? Financial position means the position of your assets and liabilities. How much you owe from others and how much you have to pay to others. Next, we are talking here about cash flow statement. As we have seen that the transactions are recorded on accrual basis, whether it is a cash transaction or credit transaction. So when it comes to the trading profit and loss account or balance sheet, from there you cannot ascertain that what is the actual cash transaction. In order to understand what is the actual cash transaction, we take only the cash transactions into accounting for a particular period. And for this reason, we prepare cash flow statement. So all the transactions which are of purely cash in nature are taken into cash flow statement. Then the process goes same. We need to identify the transaction. When we identify the transaction, we put them into the books. The books of journal, that is the original entry books. We identify the transaction and then put it in the journal. From journal, we classify the accounts and put it into ledger. Then we summarize, we go for analysis and interpretation, and then presentation of this in the form of reports. So what is the analysis of business transaction? All the transactions which are included in your journal, the first entry is recording, and this recording is done through a voucher. Voucher is a piece of paper where we write the reason for making the payment. There is one signatory who signs it, one authorized person who authorizes the payment, and there is one person's signature who is the receiver of that amount. So voucher, it is a piece of paper which involves the monetary transaction, the value of the money in the transaction, the persons who are involved in the transaction, the reason for the transaction, and the person who authorizes the payment. So all the transactions which takes place has to be entered first in a voucher. Again, I told you all the transactions has two aspects. One is debit, the other one is credit. So in the voucher also you will find two aspects, debit and credit, and you need to mention the reason for debiting the transaction and crediting the transaction. The second important thing in voucher is like this is a overview of a balance sheet. You see how balance sheet is prepared. We have liability side and amount side. We have again asset side and amount side. In the balance sheet, the liabilities and assets are totaled and the total is equal. So liabilities means the obligation of the firm, the amounts which the firm has to pay. Asset means the resources owned by the firm, that is the amount which the people, which the business receive. And you can see capital, loan from bank, all the liabilities items are there. And in the asset side, all the assets that the company owns are mentioned. Now this is important, the classification of accounts. How the accounts are classified. The accounts are classified on the basis of personal account or impersonal account. The first classification is personal account and second is impersonal account. Under personal account, we have natural personal account, like the name of us, Mr. A, Mr. B, Mr. C, any name, the person's name. Artificial account, it is the name of the business entity, the organizations which are created by law. It can be name of a bank, it can be name of any institution, it can be name of any organization, it can be name of any other form of business. And third, it is representative personal account. Representative personal account are mostly the accounts which are not directly linked with persons. Suppose Mr. X is personal account. Mr. X has to receive salary outstanding for last 3 months. So salary outstanding is your representative personal account, that you are representing that amount for others. Now coming to the impersonal account, in impersonal account we have real account and nominal account. Real account can be tangible real account and intangible real account, and nominal account deals with all the income, expenditure, losses and profit. The transactions, if it deals with losses, income, expenditure and profit, they are covered under your nominal account. Real account, when we talk about real account, it is the accounting of goods, it is the accounting of goods, stock, cash, etc. Now if you go with the rules, the rule of, you need to by heart these rules for debit and credit. Are you understanding? Come on, respond. Are you getting what I'm saying?
Yes,
I
yes, we are
can see
getting it.
only very few response. Everyone is attentive?
Yes, yes, yes.
Okay. So rules for debit and credit. Now one important thing that you need to by heart, the types of account, the classification of account. So types of account or classification of account is personal, real and nominal. Now what are the rules on which basis the transactions are classified? We need to identify the nature of this transaction. So if you start with the personal account, then it is related to persons, whether it is a natural person or an artificial person or a representative person. But the common bracket is of a person. So the rule is debit the receiver and credit the giver. Anyone, any person, if he receives anything, he is going to be debited, and if he pays something, he is going to be credited. Am I clear? Mr. X paid to Mr. Y. So Mr. X paid, Mr. X is the giver. So Mr. X will be credited, and who is the receiver? Mr. Y, because Mr. X paid to Mr. Y. So Mr. Y will be debited. Anyone who receives it is debited. Anyone who pays it under real account is the creditor. So debit the receiver and credit the giver. Real account, it is all about stock, goods. I already told you. Assets. So debit what comes in. When this type of things comes in the business, it is debited. Credit what goes out. When it is moved out from the business, it is your credit. Nominal account. Nominal account, we debit all the expenses and losses. All the expenses and losses equal value to the transaction amount is debited, and all the incomes and profits and gains are credited. So losses are all expenses and losses. Nominal account, debit all expenses and losses and credit all the incomes and gains. So learners need to find the difference between the three types of account, and they need to by heart this concept. You can see for every transaction we have a debit and we have a credit. So when both the aspects of a transaction are hit, they have a space, it means that both are under your double entry system. One aspect is debited and the other aspect is credited. So this is the gist of your dual concept. Now coming to balance sheet, this already we have explained. Now we have accounting equation. What is accounting equation? It is assets equal to liabilities plus capital. I told you both the sides should be equal. So it is assets equals to, it is the presentation of your balance sheet, financial position of your state balance sheet at a given point of time. So it is assets one side, and the other side we have capital, which is a loan, plus all the other liabilities. So assets equals to liabilities plus capital. These are all the effects which you need to go through them. Now we come to journal entry. Journal entry is recording the transactions, how the transactions are recorded. It has a set performer, and the performer says it has a date column, particulars, ledger folio. Ledger folio means it is a page number. We have debit amount, we have credit amount. For each type of transaction, we have a debit and credit. So column 1 is date, the date of the transaction, particulars, the nature of the transaction, ledger folio. From journal, we transfer the entries to the individual heads in ledger. So we need to put the ledger folio number that on which page in ledger this particular accounting transaction has been transferred. So kindly go through these entries, how we debit and credit. All are debited and credited on the basis of the accounting rules of personal account, real account, and nominal account. Next, it is ledger. Ledger means transferring the accounts of one head from journal to the ledger book. So, here we have two sides with the same column. The first one is debit side and the second one is credit side. All the debit entries from journal are transferred to the credit side and all the credit entries from the journal are transferred to the debit side. We have the columns as date, particulars, as we had in journal the ledger folio number. So in ledger we have JF, that is journal folio number, and then amount. Same way you can see it is there in the other side, that is credit side also. We have a date, particulars, journal folio, and amount. So we need to post the entries. When we write the debit side, we use the word to, and when we start in the credit side, we write it as by. Suppose this is the transaction. On 1st August, goods are sold for cash. Now, first you need to identify the transaction. It should have a two aspect. So, the first entry is related to cash because it is sold for cash. And the second entry is related to sales account. So, sales account means it is your goods account. So, both the aspect here it is, sorry. So both the aspects here is related to your real account. Goods are also real and cash, it is also your real account. So when goods are sold for cash, one entry is cash account, the other one is sales means goods account. So how you make the journal entry? It is what is debited? Debit, it is real account. So real account, what is the rule? Debit what comes in, credit what goes out. So when you enter into a sales transaction, goods are going out of the business and against the sale you are receiving cash. So the entry goes like this: cash account debit, debit what comes in, cash is coming in, so cash account debit to sales account because goods are going out. Now you can see in both the columns it is written 12,000, 12,000. Now we need to prepare ledger account. So the first ledger account will be of cash account. We need to pick up the entries, all the entries which are related to cash. And then we have the debit side and credit side. So cash is debit side. So what we do in the debit side, we will write the corresponding entry. What is the corresponding entry of cash? It is sales. And we start in the debit side by 2. So we will write down 2 sales account 12,000. Am I clear? Am I able to make you understand this point?
Actually, I will like you to shed more light on this because I'm a novice in accounting.
So you have made the entry as cash account debit to sales account. What part is debited? Cash. What part is credited? Sales. Sales means goods. So when you make the entry, you transfer the entry from journal to your ledger account. I told you the ledger account has two aspects. One is debit side and the other one is credit side. So first you are preparing, you need to prepare the accounts, ledger account for all the entries which are of similar in nature. So all the entries which are related to cash will be posted in the cash account. So what is the entry here? Cash account debit to sales. So cash is debited, you come to the debit side. What is the corresponding entry to cash? It is sales. So in the debit side, as it is cash account, we again do not write the same name. Cash account may we do not write the same name. So what we will do, what is the corresponding entry to cash? It is sales. So we will write down to sales. And when we prepare sales account, sales is in the credit side. So we will come to the credit side and we will write by cash. I hope it is clear now.
Yes.
We don't need to write the same name. We have to make the opposite entry. So you can see this is cash account and here it is sales account. In sales account it is to cash. Already the name is there in the heading. The type of account is sales account, and this sales again it cannot be mentioned in the column. So what is the corresponding entry of sales? It is cash. Now we have certain compound entries. Compound entries means the entries are clubbed. It is received rupees 14,000 in full settlement. You are receiving rupees 14,000. That means cash is received for rupees 14,000 in full settlement. That means further you will not receive any cash of a debt of rupees 15,000 from Raymond on August 21. So against the payment of rupees 15,000, against a debt of rupees 15,000, you are receiving rupees 14,000 in full settlement from Raymond. So what will be the journal entry for this? The journal entry is what you are receiving, debit what comes in, you are receiving cash. So cash account is debited. You are receiving it with from whom? From Ram. So Ram is a personal account. So credit the giver. Ram is making the payment to you. Credit the giver. So it is to Ram. You are receiving cash 14,000 and actually you owe rupees 15,000 from Ram. Now there is a difference of 1,000. So this 1,000 is a loss. You are receiving less. You was supposed to receive 15,000, but you are receiving only 14,000, and the balance of 1,000 which you have not received is a loss for you. So loss is when you allow someone to make the payment in full settlement. The term that is used is known as discount. Discount can be allowed when it is against sale, and discount can also be received when it is against purchase. Am I clear? Discount allowed is a loss. Discount received is a profit. Always remember, discount entry is always followed with cash entry. If cash is debited, discount is also debited. If cash is credited, discount is also credited. Am I clear? Now when we make this entry in the ledger, first it is cash account. So cash account is debited and we have to see the corresponding entry of debit. The corresponding entry of debit is credit. What is credit? Ram. So in the debit side, we will write to Ram and the amount which is in front of cash, that is 14,000. Again, discount is debited. And what is the corresponding entry? The corresponding entry here, it is also Ram. So it will be to Ram, but the entry in front of the discount is 1,000. So debit mein, it will be 1,000. And last one, it is to RAM, that means RAM is credited. So in the credit side, it will be the corresponding entry by cash and by discount. By cash 14, by discount 1. So it makes a total of rupees 15,000, which nullifies your transaction. 13,000 owed, 13,000 used. So now the balance is 0. Am I clear till this? Okay. Can we take 5 minutes break? 2-3 minutes break.
It's okay.
Okay. After 2-3 minutes, we'll be back. I will just have a glass of water and we'll be back.
All right. Thank you, ma'am.
Okay. So the compound entry is clear. Now I am coming to the next one. This all practice question you need to do. Next, it is financial statement. Financial statement means you need to prepare profit and loss account, your income statement, your trading and profit and loss account, and balance sheet. So all the entries which are of recurring in nature, which are related to income, expenditure, profit, and losses, they are to be recorded in your profit and loss account. And all the entries with respective of nature, whether it is credit or cash, they have to be entered in your profit and loss account. So all the revenue, that is income, and all the expenditure, that is expenses, are recorded in your profit and loss account. The next one is your balance sheet. The balance sheet, it talks about the position of your assets and liabilities at a given point of time. So when we talk about the assets and liabilities, assets are something which we are going to use for year and year and which generate profits. And liabilities are which we have to pay. It is our obligation. So a balance sheet is a statement, not an account, because at a particular point, it gives you the financial position of your business. We prepare it on the basis of the transactions that has occurred, and the balances are taken from trading account and profit and loss account. You can see here that these are the contents. We have a content for preparing the balance sheet. All the assets are placed in the asset side, and all the liabilities that we have taken are, we require them to pay back. They are projected in the liability side. At the end of the balance sheet, after consolidating all the accounts and statements, the balances of balance sheet should be equal. And why it has to be equal? Because it is based on dual concept. Whatever entry with whatever amount is debited, the same is credited also. All the aspects are debited and credited with the same amount. We are following the dual aspect. That is the reason why we need to have the balance sheet to be equal. Now we are coming to the next topic, and the next topic of discussion is cash flow statement. I told you why we prepare cash flow statement. We prepare cash flow statement because when we prepare the trading and profit and loss account, then in that case, it is a summary of your credit plus cash transaction. So at a point of time, if you need to know the balance of your cash account, you cannot prepare because it is of cash and other transactions also. So what we do, we go with the second part, and the second part is your cash flow statement. Cash flow statement is not a part of your main financial statement, but it is a compulsory to be used as a subsidiary. Subsidiary means when you prepare financial account, financial statement, along with the financial statement, a supporting has to be given for cash flow statement. So please go with the terms and try to at least recognize the types of transactions which are there. So if we start with the cash flow statement, the cash flow statement has three major aspects. The major aspects are cash flow from operating activities. So cash flow from operating activities, they are the principal revenue generating activities of an enterprise. If you have a positive cash flow, it means that the enterprise is able to pay out its bills, expenditures, make new investment. That means it has enough cash through which it can make the payment. At the same time, if the balance is negative, that means your expenditures are more compared to your incomes. So negative cash balance is not preferred in operating activity. Same way, cash flow from investing activity. Investing activity deals with the acquisition and disposal of long-term assets. All the asset side is taken into account in investing activity. So expenditures, if the cash flow from investing activity, the cash balance is more, that means the recovery, the sale is more. And if the expenditure is more, it means that we have excessively purchased the assets. And cash flow from financing activities, it is taking part, it includes all the activities which are financial in nature, which are taken from the liability side. So this is the gist of your cash flow from operating activities and cash flow from investing activities and cash flow from financing activities. Operating activities is revenue in nature, investing activities is your asset side, and financing activity is your liability side. So this is the cash flow format. We take into account the profit before tax and extraordinary items. Net profit will be given to you. Then we need to identify the cash flow from operating activities under the following heads. Then we need to identify the cash flow from investing activities and then from financing activities under these heads. So all these heads you need to go through it by heart, and then you need to go with the calculation. The final total is going to be your cash flow. We need to come to the conclusion, we need the data for 2 consecutive periods. The data should be for 2 consecutive periods. So you need to go through it, and in case of any doubt, you can ask in the next class. Because for us, it is not possible to solve the question. Actually, Smriti ma'am told me that it is a counseling session. So we need to here clarify our doubts. I hope you understand what I am saying. We need to clarify our doubts, and doubts will arise only when you come prepare for it. Okay? This is a course which requires certain amount of practice for you. If you do not go with the practice sessions, it is very difficult. There are self videos available. Just go through it, how to prepare cash flow statement, how to prepare profit and loss account. If you need, I can provide you these links tomorrow, so that at least half an hour you give to these videos, which will make you learn how to prepare these accounts. I hope you people are listening to me.
Yes.
Yes, we are listening.
Because we cannot do the practicals here. One practical will take an hour. So I need to make you understand all the 7-8 chapters which are there in each block. We can have only discussion, and in case if you need any query, just let me know. Yeah, I will share the videos, I will share you the links which will make you understand how to do the practicals, or at least you will come to know about the basic terms that are used while using these practicals or doing these practicals. Okay, tomorrow I will definitely share you the links, how to prepare final account, how to prepare why you are lost, What is your name? Mungru. Why you are lost? I told you that it is quite technical. So one day's session is not enough. It is not a practice session. It is a counseling session. I can only make you understand what are the contents in the first unit, just to familiarize you with the content. Practice you have to do by yourself. Yes, I do understand accounting for the first time is something very difficult, but at the same time, it is very easy also. Okay, the last day we will be doing practical so that by the time at least you are familiar with the things. Okay, I told you we have 6 days class, so last day we will try to have few practicals, or if you solve any practicals, the incompleted part we can discuss it in the class. Am I clear? I'm just writing my email ID here in case you have any doubt. This is my email ID. So in case if you have any doubt while understanding or solving, you can just write to me. I will respond. Okay, so just go with the, in each unit, I will show you after each chapter. So I will come to this. Because tomorrow we will be doing a cost account. That is again very technical. See, these are the keywords which is given after every chapter. Can you see the keywords? Just go with the summary and the keywords. It will make you more understandable. Okay? These are the keywords for each chapter. You need to go through them. And after each chapter, on the completion of each chapter, it is the summary that you need to understand and the keywords. I hope every one of you have marked your attendance. So at the end, we have the practical questions also. If possible, try to solve them. They are all self-assessed assessment questions. They're very easy. In case you find any difficulty in understanding, you just text me or ask me in the next class. Because this is only the introduction part that we have done today. Tomorrow we are going precisely with the topics like cost account, budgetary, like this. So that's all for today. Can I end the class?
Yes, you can end, ma. Thank you very much. We are grateful.
You people are working or
Thank you,
students?
ma'am.
You people are working or students?
Mhm. We are doing both, ma. We are doing both. We are working. We are students too.
Okay.
Mm.
So you are doing this for your progress.